Oi, Budge!
In this episode of Budge, How to Fudge Being Human, we talked to friend of the show and business guru, Tom Matthews, on narcissism in business and the psychology of mergers and acquisitions. Is it really all data-driven, or do emotions, psychology, ego, or even superstition really drive business behavior? We hope you love the episode and subscribe to Budge on YouTube, Spotify, Apple, or wherever you're listening.
We've walked away from a lot more than we've taken over, because in the not-profit world, what they do is they literally get to that part where they go $100,000 in the bank, $500,000 worth of redundancy or payouts to everybody, and they're just desperate, and you have to walk away from that.
Your brain that's on autopilot is often right, and it's just you trying to unravel, why do I feel like this? And then you start to post-rationalize. I've got this feeling, now I've got to work out why I'm feeling like this. And so then you get this confirmation bias of trying to find all the information that supports your instinct. Yeah, my instinct was I found Tom just awful.
We felt they had a big ego. We felt that they weren't open to alternative ways of doing things. We declined the opportunity. One of our peers ended up investing and they sold that company for over $1 billion. So yeah, we were the oones sort of left kicking ourselves.
Before we start, Tom, I guess the big question is, what is private equity?
Yeah, sure. So private equity, so what we do very simply, we sort of term ourselves a growth investor. So what that means is we invest alongside ambitious founders and management teams to help a private company on the next stage of its growth journey.
So I guess private equity firms, they represent sort of the epitome of humans, right? You guys are logical. So Darren is the epitome of being human, but apart from Darren, you guys, you control your emotions, you are logical, you make really rational decisions. But increasingly what we're seeing with humans is that we don't necessarily do that. We can have all the data in the world, but often we'll make the same decision, irrespective of what the data says. And we often just use the data to kind of validate what we already think. I mean, how much of that is true in your sector, do you think? So you go out, you see a company you're interested in investing in. How do you go about actually deciding if you want to buy that company?
Yes, it's a good question. So we probably have a different approach to others in the market. So as I mentioned a moment ago, we're a growth investor. So we only look for businesses that ultimately are growing and that we can help accelerate that growth. So we don't look at any sort of turnaround opportunities. We don't look to pump businesses full of debt and financially engineer a return. We look for growth opportunities and we look for sort of typically founder-run smaller businesses where we can really help make a difference and help a founder on the next stage of the growth. So going back to your question, how we actually look for opportunities, we look for markets that are growing at above GDP growth rates with sustainable drivers underpinning that growth. So for us, it's about picking the right sector, picking the right niche within that sector, and then picking the right company as a platform to embark on that accelerated growth journey. And a lot of that is around people. So making sure we're partnering with an ambitious founder, somebody that we like, somebody that we trust, but I'm sure we'll talk about that shortly.
Yeah, brilliant. So Tom, you're known as the ugliest man in private equity. Do you think that's driven you forward to succeed? And now you're managing director there, I think.
I think that's exactly right, Darren, yeah.
You're making up for your deficits elsewhere. I think that's lovely.
That's right.
Is that why you bought a big car, Darren?
Yeah. So look, what you just described though, you look at GDP, you look at numbers and what have you. Do you still think most people choose to sell their baby that they've been growing and investing in to you because they like you? Or is it just because of numbers? And do they post-rationalize their decision to join forces with you because of that gut instinctive or in my case, repulsion of you?
Not sure about that, Darren. I remember very vividly that time we went swimming at Ivy Pool Bar, but we'll talk about that in a moment.
No.
In answer to your question, in answer to your question, I think it depends. So it depends on what the founder or the shareholder's objectives are. So, for example, if they are looking to sell 100% of their company, so cash out 100%, then quite frankly, it just comes down to numbers. It comes down to who's going to pay the highest price for that business, probably most of the time. Our model is a bit different. So our model at Pemba is usually, as I said, where we partner alongside a founder and a management team. So what that means in layman's terms, it's a partial sale on day one by the founder. So Darren, we partnered with yourself and your previous business. So you sold some of your shares to Pemba. So you de-risk your personal financial situation, maybe use those funds to pay off your mortgage or buy a lovely farmhouse in Bathurst. And then really brought on board an experienced growth investor in Pemba to sort of help embark on the next stage of the company's growth journey. With the idea of us all working together to grow the business and ultimately achieve a premium valuation in 3 to 5 years' time on that second payday. That's what we call our sort of 2 payday structure. So in that scenario where it's a partial sale, not 100% sale, I do think the facts, the figures, the valuation becomes less important, and other factors such as, you're going to be working with these people for the next 3 to 5 years, sometimes even longer than that. So do I trust them? Are they going to be good stewards of my business? Are they consistent in terms of delivering what they promised? Can they help me? Will they add value to my business? Will they, as a founder, will they look after the key people in my business, which for a lot of founders, there's a lot of family members that work in these organizations. So I do think it's different. And I do think, but if it's a partial sale, there's a lot of other factors which probably become more important.
You're spot on. It really did boil down to trust. And I still didn't trust you when I signed that contract. Do you remember me saying, I expected as soon as I signed to go on board with you guys. I expected
marching you out the door.
People to
There's your black bag. On your way, son.
Clowns to jump out of wardrobes, going, you fell for it. We've got you now.
That's a two-way thing, though, is it? So I guess you've probably got these founders that, like I said, they're probably so emotive about their business. They have the issue: do they trust you? This scary private equity firm, because private equity has that reputation. But I guess from the other side of it, how do you know whether or not you can trust that person with your money? How much is that gut instinct, I guess?
It's a really good question, and it's the sort of, it's the key decision that we make, because we're investing millions of dollars of our investors' funds into this company, and quite frankly, we're backing that individual and their senior management team. So it's a really important decision for us. We spend a lot of time, as Darren knows, getting to know the people that we're going to partner with. So we do a lot of what we call people due diligence. That involves making sure there's strategic fit, cultural alignment. We spend a lot of time getting to know each other. So it's not just, one session. It's, we've
that what the swimming pool story is all about.
We took Darren swimming up at Ivy Pool Bar after a very social lunch, which was good fun. So it's about, really building trust, really building rapport, understanding, can I work with this individual or these individuals over time? Do I trust them? Do I back them? And ultimately, are we going to work well together? So there's an element of sort of facts, logic, etc., but there's also a huge amount of intuition, getting to know you, and sort of building that trust.
So have you ever been in a situation where you've just sort of gone, I know you have to be careful how you answer this. Have you ever gone, right, this is a proceed and this person's an absolute moron, or probably in better terms, I've just not got the right connection?
But they did with me. They thought this bloke's a moron, but yet the business is doing all right. So if we had someone competent there,
what could we do with this?
Exactly right. No. Yeah, look, we've had lots of those situations, and we've had some where, quite frankly, we got it wrong. So we didn't invest in the business because we thought the founder, was someone that we couldn't work with. We felt they had a big ego. We felt that they weren't open to, alternative ways of doing things. Not necessarily that's always, important to us. And, one in particular, one of our peers we declined the opportunity. One of our peers ended up investing, and they sold that company for over $1 billion. So we were the ones sort of left kicking ourselves. But quite frankly, a partnership with a private equity firm or a growth investor like Pemba, it is a long-term commitment. So you do need to like the people that you're going to be working with. It's, I joke sometimes that it's like a marriage. In some cases, it's longer than a marriage. So, I think that people side is really, really key.
Do you do that? Because you've acquired quite a lot of firms, and do you put because these are professionals at it, whereas you're not. No.
We do use someone though for a lot of our advice around this, and it's almost like he did similar sort of background to Tom, but we're almost like, because we're the not-for-profit, his kind of like pet project, if you know what I mean. He does it, yeah. But I guess the difference in our world, not-for-profits, is we take over companies for free, Tom, which sounds weird. So you're taking over not-for-profits that are either that they come to you at the last minute, where in absolute dire straits, or one came to us when they just recognized the government was changing the policy agendas. They knew they couldn't grow and compete, so they came to us to be part of us. And then the latest one is just, an organization that the board and the CEO have been around a long time and want to kind of become part of something bigger. But what we've walked away from a lot more than we've taken over, because in the not-profit world, what they do is they literally get to that part where they go $100,000 in the bank, $500,000 worth of redundancy or payouts to everybody. And they're just desperate, and you have to walk away from that point, because they don't want to release control of it, because they're so emotional about this thing they created in the 1970s, 1980s. They're so emotional about it, and they want to go to a company that's got the same values and all the rest of it, when in reality they should just be going, shit, someone take us over and save us from owing $500,000. So I think it's a very different thing. It's a lot more emotional in my world. And I guess that's the question then, is it's that balance for yourself between we're in this world of data-driven decisions versus this emotive part. Do you think there is a part of you that goes with your gut?
Yeah, I think definitely. Ultimately, what are we looking for as an investor? We start with the market, so we tick the box if it's growing, it's got long-term thematics driving sustainable and above sort of GDP growth in the sector. We look for businesses with a differentiation. We look for there's a load of other things that we look for, and then you come to the people. And unfortunately, it's always a bit of a gut feel and instinct when you're backing people. There's no there's obviously lots of tools that you can utilize, and we do use those. We do a lot of testing. We use this amazing product which by Isha House. But ultimately, it's a leap of faith a lot of the time, and you're backing people, and sometimes people are dishonest, and sometimes you don't make the right calls.
This is okay, crazy. We're calling this episode, of course, mergers, acquisitions, and superstitions. People making life change decisions on instinct. Do you have any superstitions, or is there any superstitions in that private equity world which kind of influences things?
I personally, so my wife's family are very, very superstitious. I don't really have any sort of personal superstitions. No, it is typically in our business. It's a lot more sort of logic based in terms of how we make or how we try to make decisions, and then we always sort of have a hypothesis driven approach. So what do we need to believe for this investment to be a success, and then we look to test those hypotheses through our due diligence process. So it is quite sort of logic and fact-based and analytical.
But then, like Einstein, you'd say, is one of the most analytical, logical and fact-based scientists that ever existed, who said the only real valuable thing is intuition. And there's a lot to be said, gut feel, instinct, your system one brain, your brain that's on autopilot is often right. And it's just you trying to unravel, why do I feel like this? And then you start to post-rationalize. I've got this feeling, now I've got to work out why I'm feeling like this. And so then you get this confirmation bias of trying to find all the information that supports your instinct, I guess. So, my instinct was I found Tom just awful. But then the wife, for some reason, said, no, go with it. So I just did that. Shall we sort of pivot a little bit with this one to talking about the people you've had to work with and whether they're... it's something your boss, Magnus, asked me once about narcissists and sociopaths. And he was describing you, obviously. But also working with people. Now, there are a lot of downsides to being one or other of those things, which are often used in the same breath. But there are really subtle but important differences.
You might have to explain that. Someone like me, because we're talking private equity, and obviously Gordon Greco.
Gecko.
Gordon Gecko comes to mind. That the mother of all narcissists. Now, what is the difference between a narcissist and a sociopath?
Well, there's Tom, narcissist. There's you, sociopath. I'll leave it to the audience to draw their own conclusions. I think the easiest way, so you got all these words that you can say about narcissists: self-obsessed, all-important, lacks empathy. But this is the key difference for me, is that others may be hurt by their actions, but they kind of don't intend it. They didn't mean to. They just didn't even consider those people. And then they're really surprised when that person is offended or hurt or suddenly responds angrily. Something you come across all the time.
Absolutely.
Whereas a sociopath has all of those things as well, but they may intentionally hurt other people to get to where they want to go. And so they all sound really negative things, but it's a fact that according to studies, that narcissists are more successful, and sociopaths as business people. There's a lot higher prevalence of those in successful entrepreneurs. Have you found that, and have you had to negotiate that, Tom?
Well, I'm talking to one right now, right?
Yeah.
Absolutely. I think, the sort of nature of an entrepreneur.
I thought you were going to play it safe and go, no, absolutely.
No. Yeah, I think that, like I say, the nature of an entrepreneur or a founder, these are individuals that, they've not followed the sort of corporate ladder. They've taken a risk. They've gone out on their own. They've rolled the dice. They've sacrificed, everything for their businesses. They've put blood, sweat, and tears over many, many, many years in building their companies. They know what they want. They're typically very task orientated. They're very goal focused, and they're not afraid to sort of, step on a few toes along the way. So I'd say it's a very sort of common characteristic of a lot of the founders that we come across. We are lucky in our sectors that we do, for example, we do a fair bit in healthcare and training and education. A lot of the founders in those sectors are a bit more sort of mission driven or purpose driven. Yeah. So I wouldn't say it's this sort of universal application for all founders, but I do think it is a relatively sort of common trait of some entrepreneurs.
Okay.
Because I'm just looking at the stats. Between 4 and 12% of CEOs have psychopathic traits. How do you actually spot them, Daz? I mean, if there's someone like Tom who's working in this industry, and how do you spot people?
Well, I think you can kind of tell, but they can be driven and focused, and absolutely. A lot of it, though, is based around their ego. So it's actually want to be successful, so you look at them and like them. They want to have their own podcast so that people admire them excessively. And they can be, in particular, narcissists we're talking about, generally charming. And people get caught up in that orbit. They get caught up. People like looking at and being with positive, proactive, forward-moving people. I think Elon Musk is one that people have this almost a cult formed around them. So we were talking about narcissists and sociopaths. Listen to this description of successful people generally. This is an official document, but he is a charismatic leader who inspires people to follow him, a strategic thinker who can master the details, tireless worker, incredible focus, problem-solving skills, very well liked by his employees, but also able to make and execute unpopular decisions. Above all, he's an exceptional communicator who can convey a vision to any audience, from Wall Street to the most junior employee. Now, you think that's describing you. No, the perfect CEO, really. But what it is actually is an official portrait of a corporate psychopath. Provided by law enforcement.
But how is any of that bad?
No, but it helps you look out for people. Oh, but actually, that's a really good point, because being a sociopath or a narcissist, it is bad, isn't it? But there's actually these upsides. Are they the people that have pushed forward our species throughout time, saying, well, sod this, I'm going to try and use a seed drill or invent one, or I'm going to move out of Africa? Or are they the people that have moved forward our species, and the rest rest follow, and then we tolerate. Like we know in your sector of employment and training, there's a couple of people who definitely say those leaders are narcissists.
I don't know who you mean.
But you think, well, bloody hell, they've been successful as a result. But have they got any real friends and true friends? Can people trust them? And I think with reading up on these is that often these are the people that are great at growing a business, but then they're desperately, when they go to that next level, and this is where your experience is really relevant, Tom, is that they need to bring in people to really stabilize and grow that business further while they're a figurehead rather than a details person. You know, have you found that? And is that one of the most difficult things?
Was without doubt the most difficult thing that we do. So yeah, you know, founders by nature, that, you know, they've had to do everything themselves in their businesses. You know, they've had to be a jack of all trades, from sales to product, you know, to customer success, to admin, to HR, to stocking the fridge full of milk for their employees. You name it, they have to do it. And you know, that's quite hard to go from that sort of mentality to, you know, all of a sudden actually giving up a bit of control. So they do, you know, control is typically a very, very big thing for founders, and stepping back, whether that's sort of into a strategic role from the day-to-day operations altogether, or just freeing them up so they can focus on what they're good at. That it's very hard, and it's something that we spend a huge amount of time on. You know, even yourself, Darren, you know, you sort of transitioning from that sort of, you know, founder role, you know, to into the ReadyTech group, and, you know, the additional support, etc., the additional oversight. I can imagine you found it personally quite challenging.
Yeah, releasing that control that you've had to take hold of, whether you wanted to or not, and then you just get used to it, and you do lose. Nobody else will be able to do this as well as I can, and I still scrub the toilets in offices.
So it's just for fun these days, right? Everyone's got to have a hobby, Darren.
Don't you have that quote of Elon Musk?
I do somewhere, but if I'm a narcissist, which might be true, at least I'm a useful one, from Elon Musk, which is probably a good point to end this one, because there is a bit of hope, though, in the fact that a recent study, or a few years ago, that as we get older, I refer myself now as a narcissist and sociopath. As narcissists and sociopaths get older, they do actually sort of move away from that antisocial behavior. So there is hope, I guess, for narcissists and sociopaths.
I wonder if it's because they just lose the energy and hope, or whether they learn actually other people are important as well.
Tom, thank you so much for joining us today to talk about narcissism, sociopathy, and mergers, acquisitions, and superstition. We'd love to have you back again sometime, if that's okay.
That'd be great. Thank you for having me.
Oi, Budge!